you have to make sure that you understand the math. And if you don't understand how those processes work, then you need to be educating yourself, right? You need to be going down the path of YouTubing or joining newsletters or giving, somebody like Chad a call and saying, hey, how does this work? Like, what should I be doing?
Basic information. There's a YouTube channel yet, but our compliance hasn't approved to be published. And so we're working on getting that out there, which is helping people in certain situations. Somebody going through a divorce, selling a small business, to kind of help them, give them advice on what they should be doing and thinking about in these certain situations, right? But, there's also great books out there that you can pick up that is the basics of investing. And they, starting from investing 101, what is a mutual fund? What is an index fund? What's a stock? What's a bond? And to give you at least an understanding of what is out there to kind of take it to investing with your funds. And then as you learn the basics, you can go into the more detail about your certain situation and understand what you're trying to look for in investments. So it's all out there. And like you said, with the internet, YouTube, and a lot of good advice, and a lot of bad advice too. So you got to be able to separate the two. But, the education that's available to you is kind of unlimited compared to what it was, 15, 20 years ago.
Hey guys, and welcome back to another episode of Financial Mastery Simplified. I am your host, Jacqueline or Jax Crider. Today we have Mr. Chad Taylor on with us. He is a financial planning expert. And so welcome to the show, Chad. Tell us a little bit more about who you are, what you do, and why you're excited to be on the show today.
Appreciate being on the show. I'm a financial advisor based in San Diego, California. I've been doing it for 29 years. We run a really nice practice here with 7 other advisors in our firm. I'm excited to be on the show today to talk about, investments, financial planning, and also announce we just were nominated as the best in state for California for financial advisors last week. So nice little reward we got for the firm.
That's awesome, and congratulations for that. Yeah, it's so important. We talk a lot on the podcast about intentionality and about, kind of understanding where it is you want to go and what to do. And so as you and I were discussing a little bit before the show, I actually almost ended up in your space because I genuinely like helping people financially succeed. I obviously, because of what I do for a living, believe that, owning a home is one of the larger pieces in that wealth portfolio. But it is so important to have somebody who is advising you financially to kind of help you figure out beyond, the day-to-day, what's happening, what are we doing, how are we getting there?
Yeah, for sure. Obviously I'm with you. I think owning a home is one of those first steps as you are, getting older and coming into adulthood, and the way to build wealth. But on top of that, you've got to understand how to manage money and plan for retirement. And so as you are starting to get in your first job and start your 401k and saving money, what are you doing with it? How much are you saving? How much should you save as part of your paycheck? Well, if you max out your 401k, what else do you do with those funds? And so that's part of the whole planning process, is figure out exactly what you're trying to accomplish, for retirement, when you retire, and what's the roadmap to get you to that goal. And that's what our job is.
Yeah, I think so oftentimes, when we especially start out into adulthood and we get the first, big boy, big girl job, right? I'll never forget when I very first started my very first job, and I had recently gotten married, like maybe 6 months before my very first big job. And I'll never forget, like, here we are, orientation day, and we're like sitting in a room, and they hand us a bunch of paperwork to fill out about like what kind of insurances we want, right? So like, health insurance, meaning if we want any extra insurances like life insurance or anything like that through the company. And we're also filling out paperwork like about 401ks and stuff. Now, luckily I had a little bit more information than most because my mom is a nerd and made me read Sound Mind Investing in 7th grade. So I kind of understood like compound interest or how all this works. But I think a lot of people, they get stuck in these situations, and honestly, they don't really know how to fill out any of that paperwork, right? Like they don't know what they should be doing or what box they should be checking or how much they should be giving. And, when you're first coming to adulthood, it's hard. Like you don't really know like what to do.
Yeah, no, I agree. This stuff's not taught in schools, right? So unless you learn it on your own and have some experience in it, you get that first box and all these, the list of all these different investments to choose from, and you don't know what to choose and what options to pick. And so, like I said, I think that's the majority of the people. And unfortunately, a lot of clients will just go in there, or not clients, sorry, a lot of people who are selecting for their 401k, because they get confused, don't know what to do. They opt for like a money market or a stable value fund, which, when you're younger is not where you should be. You should be in the markets. And so that contribution they're making each month is not working for them as well as it should, because they made the wrong choice. And it's not really their fault. They don't have anybody guiding them. The person that's helping them fill out the 401k paperwork can't guide them on that, and they don't know any better. Like I said, unless somebody in your family or in your life has kind of walked you through what you need to be doing and how to save and what investments are, it's a new world for them.
Yeah, no, and that is definitely the case. I think that you're absolutely right because you're right. The person, the HR person, they can't give you the advice. First of all, they probably don't necessarily know. Maybe they do, and but they're not licensed or can't really give you any of that kind of advice or thought process there. And I think a lot of times you're absolutely correct. And that's why I'm so heavy on financial education. Is I'm like, look, if you can't necessarily afford like to hire Chad or his group, even though you probably should consider it, because a lot of times it's actually more in your wheelhouse than you think it is to be able to afford it. Like you tell yourself that story and it's not a true story. But also there are other ways that you can find this information out, right? Like you can go, and I know that I think you guys like have a newsletter, that type of thing. I know there's a lot of financial planners and people who they have YouTube channels, right? They're giving out, at least, even if it's not specific advice of like what to invest in, but it's more generalized, like you should be investing in higher risk, type products when you're in your younger years, to be taking advantage of compound interest. And when you get older, you should be a little bit more measured in your approach. You should not be doing as higher risk, etc. And I think it's important for people who are listening, who maybe, hopefully most of you already know that you should be contributing to your 401k if there's a match. But if there is a match, you should at least be making sure you please get the match. Because I'll never forget, when I sold some life insurance products, we looked at the investment aspect as well, just like see what was happening. And she was actually already of the age, I think she was already 62 or, pretty much right there. And she was being offered a match, and it was a really good match. It was like 1-to-1 up to like 5 or 6%. And so very strong match by her company, and she was not contributing at all. And I was trying my darndest to get her to understand you legitimately could put the money in, get the match, and because of your age, pretty much withdraw it immediately, right? Only basically be paying taxes on it. And so why would you give up that 5 or 6% of money? Like, why would you do that, right? And so you have to make sure that you understand the math. And if you don't understand how those processes work, then you need to be educating yourself, right? You need to be going down the path of YouTubing or joining newsletters or giving, somebody like Chad a call and saying, hey, how does this work? Like, what should I be doing?
Yeah, no, I mean, like you said, the 401k match. I mean, you've got to take advantage of that. I mean, that's a positive return in your account, no matter what the market's doing. Is the company's giving you money that is available to you to take advantage of. There is a lot of resources out there, and the problem is too, because there are so much resources out there, that also help confuses people, right?
For
Because some
sure.
things don't apply to you, but you're reading it thinking it does, and so you got to be able to kind of guide yourself through that. Our website gives basic information. We're not a YouTube channel yet, but our compliance hasn't approved it to be published, and so we're working on getting that out there, which is helping people in certain situations. Somebody going through a divorce, selling a small business, to kind of help them, give them advice on what they should be doing and thinking about in these certain situations, right? But there's also great books out there that you can pick up that is the basic of investing, and they starting from investing 101. What is a mutual fund, what is an index fund, what's a stock, what's a bond, and to give you at least an understanding of what is out there to kind of take it to invest in with your funds. And then as you learn the basics, you can go into a little more detail about your certain situation and understand what you're trying to look for in investments. And so it's all out there. And like you said, with the internet and YouTube, and there's a lot of good advice and a lot of bad advice too. So you got to be able to separate the two. But the education that's available to you is kind of unlimited compared to what it was 15, 20 years ago.
Well, and I think you also made a really good point. You made the point about compliance. And so this is a sticky point that I like to talk about a little bit too, because I have a law degree. And so a lot of times I think that people believe then the financial space, like either whether it be mortgage or financial planning, these kinds of different licenses, that we are financially gatekeeping, right? Like we're trying to keep good information from people. But what they don't realize is that there's so many laws and rules and regulations about what we can and can't say, and basically how we can get our rear ends in a sling when the compliance side, Because, like, for instance, I'll give you an example. So on the mortgage side, I will have people in the content creation space or the ad space who want to have me talk about interest rate. And they're like, oh, you should give example. Or I'll never forget, I had a guy who is a very big person. He creates YouTube channels. And I asked him, what would be a great YouTube channel? And he's like, I think you should talk about what the interest rates are doing, the market interest rates that day. And I said, I will absolutely not ever do that. And he was like, why not? And I said, because it is a compliance nightmare. And so sometimes when you think that financial people are gatekeeping or we're being rude to not have these conversations with you, a lot of times it isn't that. There is just very specific stipulations that we have to follow in our space to ensure that we haven't broken compliance. Because there's a lot of disclosures we then have to give you. We have to tell you, you can't rely on this information as investment advice or interest rate advice or whatever the case may be. And so I'm happy to see that some of this is starting to lax up a little bit, right? As long as we're not getting into the nitty gritty, like giving very specific investment advice or very specific interest rate advice. But it definitely was hard there for a minute to navigate that, to make sure that you weren't getting yourself into some trouble.
Years, and it was bad when I started, and then after 0809 with the market crash, it got really bad. It's the hard part is they're trying to protect the consumer, and a lot of times they make it worse.
Agreed.
They their intentions are there, but what they're doing is really causing somebody not to be able to get the advice they need because they're regulating it, right? And so we can't do some of the stuff that we should be able to help them with because they've regulated it out of us. So, helping with like a 401k moving to an IRA, helps them manage the investments and helps them be part of their plan, and somebody's watching over it. And they're making it more and more difficult every year to help those clients with these recommendations. And so it is laxing up in some areas, and I think in some other areas it's getting worse again. There's always ways around it. Not that you're avoiding compliance, but there's always ways to get the advice. It's just you have to be able to follow the rules and maybe make some disclosures and before you start going through what you're trying to accomplish. But it's regulation's a big part of our business, and it's not going away.
It was actually the whole entire reason that I went to law school, because I started going to law school in '09, was because I was seeing, I sat at the epicenter of the mortgage meltdown. So I was in subprime when subprime started to melt before, kind of right there before '08, right 07-ish. And then I sat at Countrywide. I actually worked for Countrywide when the '08, '09 meltdown was happening. And that's, for those of you who are listening who don't understand who Countrywide was, they held about one out of every three mortgages nationwide at that moment in time. So think about that market share percentage, right? We're talking 33% of market. That is a huge, huge amount of market share. And so they were sort of at the epicenter of that meltdown. And I think that that's something that I've seen that's interesting. And I don't know if you agree with me or disagree with me, but it seems like the millennials, because they were fairly young when that was happening, well, most of them, not all, right? We have the older millennials where I sort of fall into that bucket. I'm kind of this weird generation where I'm like almost trapped between Gen X and millennial, right? I'm like kind of squarely in the middle of them. And then we have like kind of the younger millennials. And I see that a lot of millennials are actually afraid to make many financial moves because of the '08, '09 crisis, right? In their mind, it's like the fear of investing because everything could blow up, the fear of buying a house because what if the market goes down and now I end up with my house in foreclosure, I can't afford it. And I don't know, it's interesting to me because I feel like if they don't start taking some risk and they're not afraid to put themselves out there a little bit, like a smart risk, right? Calculated risk, that they're going to be missing out, and they're going to miss out on a huge amount of wealth if they're not if they won't get over that fear of like taking the leap.
Yeah, this is going back to when I first started back in the late '90s, which sounds crazy, but we had clients that were involved with went through the Depression era, right? And or their parents were Depression era parents, and they're learned from their parents.
For
And
sure.
very hard for them to invest anything because of what happened during that time period. It changed their whole outlook on life and investing and what safety is because of the Depression. And 0809 was that if you went through 0809, it's the same type of feeling that a lot of people had is because of how bad that was and things that you thought were institutions countrywide, Washington Mutual, Lehman Brothers, these big firms disappeared, and what you thought was going to happen with your retirement or your investments changed drastically during that time period. And I will say though, now that we're 18 years past that '08 crisis, that we are starting to see more clients forget about it a little bit. And we are starting to see, the greed and fear come back a little bit to investing, especially with the last 4 years being so good in the markets. People are wanting to kind of take on that extra risk with AI and technology, and they kind of forget how bad it can get when it does go south. And hopefully the '08 '09 crisis is a once in our lifetime event and we don't see another one. But a
Agreed.
recession and pullback, a bear market where you lose 20-30%, that's a part of investing and part of the market. And when the market's expensive like it is now, and some of these AI stocks have done so well, eventually that'll turn and those stocks will drop. Well, take Microsoft for example. Microsoft dropped 35-40% here in the last couple months, just recently, which is as bad as it was for Microsoft as it was during '08 '09. And so the market doesn't always go up, and so you got to have a plan when that doesn't go the way you think it's going to go.
Yeah, that's an excellent point because it's something that I talk to people about in mortgage too. I'm a little unusual in my space in that we actually tell people occasionally that it may not be the right time for them based on the information that they're providing us, right? And kind of as we're walking and talking it through, because a lot of times, when people are worried about that, then I'm asking them, well, how long are we planning on owning this house? Because a house is not supposed to be a short-term investment, right? You're not supposed to, unless you're doing it in a very specific way where you're like buying a heavy undervalued house, you are rehabbing it and you're flipping it, like that could be a short-term investment opportunity. But with homeownership in general, that's not a short-term thing typically, right? It's going to be an investment that you need to hold for 5+ years to really make it worth its while. And so if you don't have that objective in your head, or you haven't planned financially for what that's going to look like if something happens, if the bottom falls out or whatever the case may be, because real estate as a general rule is usually a pretty steady increase investment. We don't typically see a lot of dips. And if we do, they typically are like for a year or so, and then we level back out again. And we're, a typical 3 to 5%, at least in the state of Texas where I am. California, a little different. Same with Vegas, like if, because that's a very heavy area where people buy like maybe secondary homes. But as a general rule, that's typically, pretty typical. But it's definitely not a short term thing because you will have pockets that won't do well for a minute. You also, if you do need to sell, you've got real estate costs. So you have to look at that aspect as well, right? It's not just like you sell it and that's it. You get all the money, right? And so it's interesting to see though that also people are choosing to do things differently. And I actually don't think this is a bad thing. So I'd love your take on investing differently. So a lot of people, as opposed to doing the traditional like standard home buyer, home ownership route, we are seeing people who are doing different things, like maybe they're buying a tiny house and they're renting the lot that it's sitting on, right? Or they are doing a van life for a year or two or whatever, right? To get all our finances in order or something like this. Or maybe that's the lifestyle they want to live. What are you guys seeing on that front? That is, because to me, that's encouraging, right? It means that people are thinking outside the box and they're thinking about the way they want their financial future to look. And I see that as a positive, but it's definitely interesting in how it's shaping the financial markets, in my opinion.
I'll tell you, what we're seeing is the way clients are, especially some of the, I'd say the older clients, the way they're visioning like the old 60-40 portfolio, 60% stocks, 40% bonds. Because what typically happens is that, when stocks go down, bonds go up, right? And the last couple of times the stocks have dropped, we haven't really seen bonds give protection to clients. And so after the 2022 crash that we had, where we had inflation and rates went up and bonds, lost the worst we've seen in our lifetime, I started going through and our team started evaluating, okay, this is happening and it's happening now more often. How can we protect our clients if rates go up and the stock market drops? And so what that brought to our to some of the studies we did, some of the classes we went to, is we started bringing more hedging strategies to offset that risk. from the bond market and from the stock market. So we look for things that when, bonds are losing money, that would actually make money, right? And so we started adding those to our portfolios to offset some of the stock market risk and bond market risk. And perfect example here is when we had this pullback with the little AI bubble and the Iran war. What happened is interest rates went up, and when rates went up, bonds went down, but we had those hedging strategies in there for our fixed income that were positive during the time period. So it just offsets some of that risk. And so I think people are looking for more, absolute returns than they have in the past to help protect them. So I think you're seeing some of that. And then other than that, I think, for the most part, we're seeing clients look for opportunities that are out there. They that are not just stocks and bonds, right? Is there any private investments we go into, like, hedge funds or private equity funds that, give me market like returns, but not necessarily the same risk profile as the stock market or the same correlation in the stock market. And that's becoming more popular too. And so I think we're seeing more of that. But then I still think the core is people want to keep it simple. They don't want to overcomplicate things. Give me my stocks and bonds and build me a portfolio, and don't overcomplicate it.
Yeah, that's interesting. I definitely, like I said, we've seen a lot of different shifts happening, obviously, in the mortgage space. I will tell you that one of the more interesting things for me specifically is how hung up people are about interest rate in general. Because statistically speaking, if you look over the course of the whole entire time that mortgages have existed, 6, 7%, that's really not a bad interest rate, right? We've had the 80s where they were like 12 and 13, 15%, whatever, right? And then, of course, we had that period around 08, 09 where we were dropping off the cliff and we were at like, somewhere between 2.5 and 3.5. And we stayed there for quite some time. And it's very interesting to me how hard like mindset stuck they are on that number when you have them paying 30% interest on credit card debt, right? And so like in my mind, it's not that credit cards don't have a place, right? I'm not necessarily anti-debt by any stretch. I definitely can understand and appreciate that depending on where you're at in your life, that debt is something that sometimes maybe needs to be utilized to be able to figure things out, to survive, etc. But a 30% interest non-tax deductible credit card, that you're paying versus you freaking out because your interest rate might be in the sixes or sevens on a mortgage is a completely asinine thought to me. I'm like, I can't wrap my head around it. I get that you don't like that it's so much more expensive than what it was 10 years ago. Totally understood and heard. I don't like that either, right? Because I don't get paid based on what the interest rate is. So I don't care. I'd give you 0% if that was an option. Right? But it's just very interesting, like that the mindset that people are coming into with that specifically.
Stay tuned. We'll be back right after this message from our sponsors.
Welcome to Financial Mastery Simplified, your go-to podcast for making smart money decisions. We break down complex financial topics into easy-to-understand advice you can use every day. Our experts cover everything from budgeting and saving to investing and retirement planning. We give you the tools to take control of your money and build the future you want. With Financial Mastery Simplified, you'll feel informed and empowered to make the best choices for your financial health. Tune in to Financial Mastery Simplified on your favorite podcast platform. Start your journey to financial confidence today.
Visit us at fms.tips and fms.college for more information.
Welcome to House U, where we believe in the power of education. At House U, we're more than just a brand. We're your partner in home ownership, dedicated to educating, equipping, and empowering you every step of the way. Education is at the heart of everything we do. We offer comprehensive resources designed to make home ownership simple and accessible for all. From understanding mortgage options to mastering home maintenance, House U provides the knowledge you need to make informed decisions with confidence. We host workshops and seminars, bringing together experts and community members to share insights and build a stronger, more informed community. Because when you're educated, you're empowered. House U, home ownership made simple for all. Visit our website or contact us today to start your journey with House U. Empower yourself with knowledge and embrace the joy of home ownership.
Thanks for your patience. Now back to our conversation.
Yeah, it's hard. I mean, because like you said, you go back 4 or 5 years and get these loans that 3%, 2.5%, and it's almost free money, right? Because those rates
For sure.
so cheap. But you're right. I mean, you go back historically, and in a 5, 6, 7% interest rate on your mortgage is fairly normal. But with that, it's that recency bias. It's like, well, yeah, I get it, it's 6%, and that's normal. But 5 years ago it was at 3, and I want the 3% back. You know, I do too. Like I said, I do too. It'd be great if we could get that. Because it also hurts with inventory on the housing market because people don't want to sell because they don't want to get rid of their 3% mortgage, which means that there's more competition for the houses that are out there. And it's like, why move when I got this mortgage rate that's so cheap? And so, definitely, that's out there that I think, like I said, we see it in the market too. It's like, well, I want to buy that stock; it's still a good price, but it was better at $100 a share versus 120. I'll just wait, and this thing goes to 120, 130. Um, like I said, we all get it. It's recency bias, and it's just a psychological effect of investing, right? Investing for a house or investing for a portfolio.
Well, it's like that old adage, like, when was the best time to buy? 5 years ago or whatever? What's the next best time to buy now? You know what I mean? Like, not necessarily. Obviously, there are some factors of, like, you have to figure out if you're ready, if there's you're in a good spot and all the things, but I sort of laugh when, people ask me that question, and my attitude always is, and the way that I've always come in the financial spaces is that, you have to choose your heart and you have to make decisions based off of the plan that you wanna set in place for where you wanna be at, right? Because the truth is that, I can come to you, I can ask you questions. What should my husband and I do financially speaking? How should we lay all this out? But at the end of the day, like, I'm the one that has to be stroking the checks. I'm the one who has to be investing the money. I'm the one who has to be making these calls. And I think that you're right. People do want to simplify things down a little bit. But I think that some people are also sitting in analysis paralysis because some decision is better than no decision. And so, whatever that decision is, go ahead and make it and realize that in hindsight, it may not have been perfect, right? That's just possibly what's going to happen.
Paralysis, right? Because we can overthink this too much. And I always like to tell my clients or prospective clients, if you're working with a good advisor and they're picking fund ABC and I pick XYZ, we're going to be in the same ballpark. 10 years from now, we're both picking good funds. We're doing our due diligence. It's not the funds that you're picking. I rarely find people don't make their plan work because of the wrong selection in funds that they use, right? They don't make their plan work because they have the wrong allocation. They're too risky or too conservative. And that's where people's plans fail. But it's rarely the investment selections because, like I said, most advisors are doing a good job. They do their due diligence to find the funds that work best for their clients. And they might not be the same, but they're going to be, close enough over the time period where they're going to track fairly closely. Right? So it's more the failure to plan than it is the investment selection. And I was going to hit on one other thing you said too about the credit card. People who have high credit card debt or even credit cards that they're not paying off monthly, that they're paying 15, 20, 25% interest on, you can't invest until that's paid off because I can't get you a 20% return guaranteed on the market, but you pay that credit card down, that's a guaranteed 20% return on your money. And so I always tell people you got to get your financial house in order first before you start thinking about investing. Get the credit card paid off, get an emergency fund built up, get the basics done, and make sure that's taken care of before you can go in and start actually investing in a portfolio. It doesn't necessarily mean not doing a 401k because the 401k get the tax deductions and the company match. But anything outside the 401k, you got to get that stuff taken care of first before you start putting money to work.
Yeah, no, that's a really good point because I do think that that's a hard thing too, is you have all of this different advice coming from everybody, right? Like, you need to invest, you need to pay off your debt, you need to buy a house, and first of all, I'm always telling people, first of all, you need to step back and you need to be asking yourself and whoever else is involved immediately in your life, right? Like, whether that be a spouse, a partner, whoever that is, things. Because first of all, you're right. Like, we put a lot of like what our families have told us, like what we've seen, we're going to come on this or whatever. But then we need to like sit down and even if it's a short amount of time, I actually had somebody on here recently and she was talking about how her and her husband had, I forget what she called them, like money weekends or something, where they would spend like an hour and they would like sit down and kind of like map out some stuff. And I thought, yeah, that's like a really good idea. And she also said that, they made it fun. So it wasn't like this dreaded money conversation. It was like a fun thing. And they would like have activities they would do during it. So it wasn't just all these numbers all the time, all the, the money. But yeah, like figuring out like what is it that you want. And I always tell people, and I told my girls this too, work backwards, right? You can't figure out, like, you can't go to any professional, any expert who's trying to help you, and just outsource your power and say, okay, well, here, even if you tell them what you ultimately want, you have to have a little bit more than that for us. Like, what is the backstory, right? Like, why is it that this is what you want? So like we can understand how to start, putting in the right things in place, because most experts who have been doing this longer than a minute, right, who have a tenured history, good clientele, people who have trusted them over the course of time, you're absolutely right. We might see things a little differently, right? We may not see eye to eye on everything, but probably at the end of the day, we're all going to get down the same general path and get you to where you want to be. But if you haven't asked yourself any of the hard questions, if you haven't brought yourself to awareness of like, okay, so here's the path. And yeah, I'm probably not going to get 20% in the market. So I probably need to make some focus on paying off this debt. Okay, I want to own a house. Okay, well, when do you want to own a house? Do you want to own a house in 6 months, 3 years, 5 years, or whatever, right? Like, what's the goal, and how are we getting there, right? Plenty of resources. I tell people all the time, because I'm in a million moms groups, I'm like, please, I have a book. I have all kinds of resources. Like, go and use them. It'll teach you about whatever it is, like wherever you're at kind of in your journey, just so you have good information. Because so often I think that people are outsourcing their power to the experts, when the truth is that we can only be as good as the information that we're given, right?
To help you. And then, like you said, we always work back from the end game, right? So what are we trying to accomplish? Okay, then we work back to where we are today to figure out how do we get there, and we start mapping that out. Is it realistic or is it not realistic? And if it's realistic, okay, well then what do we need to get you to that point? Taking on this amount of savings and time frame for your retirement, and then we just kind of build out the plan around that. But if we don't know what the end game is, we don't know how to get you where you want to go.
Yes. Well, and that's interesting too. I don't know if you come into this, but I feel like in mortgage, there's almost like one of two camps. We have camp one, where they're terrified to take a step and they're afraid they're going to like blow up their financial life. You know what I mean? And then there's the people who have this pie in the sky idea that like they can afford a house 4 times more than what they can actually afford on paper. You know what I mean? And I'm like, I have no problem helping you afford the one that's 4 times more. The problem is right now, with the way that it stands, you don't have the income or the assets to support it. Like, I can't just miracle some things out of thin air to make that happen for you. Like, we have to have a realistic picture. And I mean, I'm a firm believer that you can get to anywhere you want to be in life, right? With good information and dedication and passion. But it doesn't mean that the expert can miracle something out of thin air to just make it work the way you want it to either.
You can't create scenarios that aren't realistic, and then tell you it's going to happen, and then all of a sudden it doesn't, and then then we look bad, right? So our job is to keep the people what they're trying to accomplish in line, and give them true outputs of where we're going to be, and give them realistic expectations so they can make the right decisions on what they're trying to do. So yeah, no, it's definitely one of the things that's out there. And I do think there's a lot of people that come in and they're hesitant to work with an advisor because they think it's we're going to overcomplicate things, or take on too much risk, or not listen to them. And I'm not saying that doesn't happen, because there's definitely a lot of bad advisors out there that are looking at that fast commission, or how to make a buck off somebody. But if you find a good advisor, they're going to sit with you and figure out what you're trying to accomplish. And it is a lot of information. And if it gets to be too much, you say, hey, look, this is too much. Can you back off and explain it in more simple terms, and have them help you figure out what you're trying to accomplish. And so I think we get a lot of that, where people are scared. The thing too, where people unfortunately think they know more than they do, and they come in and they're trying to dictate how you should be doing their portfolio, or how they should be doing this, and they're causing themselves more harm than they think, because they don't know what they're talking about, and the decisions they're making are bad decisions. And our job is to try to explain to them, like, look, I understand this is where you're coming from, but you're an attorney, or you're a doctor, or an engineer. You don't understand this business, and what you're trying to do is really harming your long-term goals. And it's a difficult situation to be in a lot of times, because those people are coming from positions of authority, right? And they're turning it over to somebody else to help manage their finances. It's that loss of control of their investments, and saying, okay, well, I'm trusting you to do this versus me. But I mean, unfortunately, we see it a lot of times where you're just looking, it's like, gosh, man, if you would just listen to what we're trying to say, we would do such a better job for you. And so, our job is a lot of times to have those hard conversations. Sometimes it works, sometimes it doesn't, where they might not be a good fit for what we're doing, because they won't listen to what we're asking them to do.
I was gonna say you have to fire the client. We have that happen sometimes. It's like we have a joke in like the legal space. Like there's that coffee cup that says, "Don't let your Google search, basically think that you have a law degree" type thing. And it is very very true. And so I think a lot of times that yes, that is the only, in my opinion, negative that has come out of the information age, right? Because especially right now, what's happening is that people are going and putting all their problems and issues into ChatGPT, and they're expecting it to like be as good as the expert that has done years and years and years. And I'm not saying that. I mean, I use AI very frequently, and it is a very helpful tool and a huge amplification and can absolutely help. But I do think that people need to start really leaning in to, first of all, finding a true expert that really aligns with what you're looking for, right? You have to be in alignment with yourself, and then you have to be in alignment with the expert that you're choosing. And it's okay if your mother's brother's best friend's sister's dog recommended Chad and Chad's not your guy. Like, that's okay, right? Like, there is a million of what Chad does in the world. Same thing with me. I always tell people, if I'm not your girl in the mortgage space, like, that's okay. Like, you're not going to hurt my feelings. Like, no hard feelings here. I'm very realistic about who we are and how we operate as a company so that there's no question mark about it, right? If you don't want to be educated, if you don't want to be empowered, if you want me to make the decision for you, I'm probably not your girl, because that's what we're about. We're about giving you great information and then empowering you to make the decision that fits with your life. Like, that is where we operate out of. And any good expert should be like that. But you also should be understanding that if you are going to an expert, it's okay to have questions. It's okay to maybe even have a little distrust. I mean, no offense, but Chad, our industry hasn't exactly made people want to trust us, right? There's a lot of, shysters, people who are about a quick buck in our space, and I get that. But once you get over that, then you should trust our expertise and our advice. And if you don't, then at least in my world, there's a door, baby. Don't let it hit you in the ass on the way out. Like, I'm not interested in helping, because it's going to be a fight all the way through. You're going to be miserable. I'm going to be miserable. And that's not what I want our relationships to look like. It's not professionally what I want. And so I can't recommend enough to anybody listening that any expert you pick, no matter what space they're in, make sure that you can trust the expertise. Now, that doesn't mean you can't question, but once you feel comfortable, trust what they're telling you and go along with that, right? Like, walk down that path with them and be partners with them, as opposed to telling them what to do. I get it. Yes, you're right. In some ways they work for you, but that doesn't mean that they don't know what they're talking about or that what they're telling you isn't valuable.
I mean, it's your money. You've worked for the money.
1,000%.
You should have questions. You should have things that you're looking for, and they should be able to answer your questions. But like you said, once you decide to move forward and trust them with your mortgage or your investments, constantly fighting them on those decisions is hurting you, because it's like, okay, well, we wanted to do this, and now you're questioning and fighting everything we do. At some point where it's like, it's just not worth it, because I'm not providing a service to you or value to you, because you're not taking the advice that we're giving, and it's not matching up to what we're trying to accomplish for our clients. So at some point, it just doesn't make sense for us to help them, because we're not providing any value, and maybe there's a better fit for either doing it on your own or finding another person to work with. But yeah, no, you need to have questions. I'm actually talking to a client right now, because I'm trying to reallocate their IRA, and I send them what I want to do, and they're questioning it. Well, they should question it, because it's a different from what they have, and they want to know why we're making these little changes. And my job is to explain why we're making those changes. But he's not fighting me on it. He just wants to understand why, and I'm explaining why. And he just sent a message back saying, "Okay, that makes a lot of sense. Thanks. Go ahead and move forward." But he needs to know why we're making those changes. That's his right. It's his money.
For sure. Well, I mean, I can't stress enough too that asking questions is one of the other things that people should be doing. It absolutely and utterly blows my mind. I think it probably happens less in your space, more in mine. In the mortgage side, I can't tell you how many people don't question at all. Like, they're like, oh, the realtor told me that this is the mortgage person that I should use, or, well, the builder said that they were giving some big incentive, so that means that I need to use our mortgage company. And they don't understand how any of that back end piece works, and so then they end up in a sling I mean, I'm also in a million groups on Facebook where, it's like first time home buyer, groups and like people, because I'm always coming from a place of value. I want to answer questions. I want to help. I want to, basically empower you to be able to understand things. And I'm like, how in the world did you not ask any of those questions? Like, you're about to take on the largest debt you will ever hold in your entire existence. You should be asking some questions. Like, I'm a little worried if you're not asking me, like, how does this work? What does my monthly payment look like? How can my payment change? Like, we should be asking some questions because it's going to be the largest expense you pay every single month. And so I hope you want to ask me some questions. I hope you're not, I appreciate if you have that much trust in me that you just think I'm going to do right, which I will, but still.
Yeah, it's the largest expense outside taxes, right? Is what you spend on your mortgage usually.
Yep, it is a very large expense. And so this has been an amazing conversation just, because I think a lot of people, they are a little bit stressed and a little bit frustrated and like, what do I do? And do I trust an expert? And how do I pick an expert? What do I, am I allowed to ask questions? Can I not ask questions? You know what I mean? And I agree with you on like some of the people maybe needing to loosen up a little control, and I get that. You're real smart ones sometimes don't want to release the reins a little bit. But I would love for you to tell the audience a little bit about like, I think you have something to offer them, like where they can connect with you. So tell us that.
I mean, we've got a great team, and like I said, we've been recognized as one of the top in the state of California. As one of the, I was recognized as one of the top 500 influential people here in San Diego, and so we're really building something special out here, and it's all because of the service we provide to our clients. What we would offer is, if you're interested, you can send us an email at chad@seapointwealth.com. That's SEAPOINT wealth.com. If you want to be added to our newsletter, we can send it out, or we send out updates on the market or what's happening in the market and what happened last month in the markets. Our website is seapointwealth.com, and if you're interested, we're offering a chance to do a free inspection of your financial plan and see if you're on the right track, and we'll kind of give you the basics of what you're doing and an overview of what financial planning looks like. And like I said, we've got a great team here of myself and 7 other advisors that are available to help out if anybody needs help.
I love that. And that is such an amazing opportunity, guys, because I think a lot of people are really afraid. They're afraid of having some of those conversations. So here is an opportunity, right, to be able to ask and pick somebody's brain for free about, where this is looking and where this is headed, and kind of have those conversations. And so thank you so much for your time and being our guest. And so hopefully you found this episode of Financial Mastery Simplified helpful, and we look forward to seeing you again on the next episode of Financial Mastery Simplified.